everybody. Thank you so much for taking the time to join us today. I hope that the month has been going really great and that the year's off to a great start for you. We're really thankful to have Sam West, VP over at Talcott with us again today. A couple weeks ago, we highlighted their income product, but they also have a really competitive accumulation product. And so we're really fortunate to have him on again today to talk about the Aspire series. But before that, I'm going to do a little bit of housekeeping. And so for our newcomers, thank you so much for taking the time to attend today. And for the people that have been with IAMS for a while, these are going to be some nice refreshers. And so I'll go ahead and jump into it. My name is Kat. I'm an Annuity Sales Director here at IAMS. And it's been a really great year already so far. We're only maybe about 20 something days into this year, but there's a lot of powerful momentum going on. And with a new carrier like Talcott that's been around for a while, that's taken over a really big book of business, I have no doubt that it's going to be an amazing year for all of us. And so for our newcomers, we've got our new producer builders. And so if you start off at the $100,000 level, you get lots of different incentives like some mailings, iPads, cash, and then you get to the mid-tier levels where if you're doing $250,000 to $750,000 of FIA premium, for example. Life insurance counts too, but as an annuity director, I only know about the annuity side, so you'll just have to call us for any life insurance questions you have. But at this level, you also see the different incentives start to increase. And so at the $1 million level, if you meet this level, you also see some seminar options, 8 to 10 preset annuity appointments, and of course, cash incentives as well. We don't see that on there, and that's because we don't want you to feel limited by what you're seeing on this screen. And so definitely a lot of the agents, especially the really seasoned ones, you guys already come with marketing, and so we don't want to change anything you're already having success with by any means. So if you have a marketing program that's already working for you, we're free to definitely talk about that, collaborate with you, and see what kind of incentives would be working for you, because we work with all sorts of different agents. And so these are some different business builders that we do have. And so once you do graduate from the 180 days, you actually move into a marketing reimbursement account. And so that's something that I think is really great. Not everybody gets paid back into their marketing. Pretty much once you're paying for marketing to get in front of folks, that's it. And then you have to go buy new leads. So with us, every $100,000 of FIA premium that you're doing, you actually get $100 of marketing back into that marketing reimbursement account. And then on the life insurance side, on any single premium life, you do get $200 per $100,000 of life insurance premium that you're doing on single premium. And off of Life Target, you get $200 per every $10,000 of Life Target premium. So that's really nice too. And then another business builder that we do have is our referred producer program. So, the biggest lifeline of your business is referrals, right? Once we buy into our marketing, what we really want to do is also see who they know that we can help, right? And so it's the same thing on our side of the fence too. So we truly appreciate the fact that you would refer over a colleague or fellow agent of yours to us so that we could partner with them as well. We give you a $50 one-time bonus when you do refer that agent and they do contract with a carrier like Talcott, for example. And the nice thing is too, it doesn't stop there. So you also get a little bit of override. Now that override doesn't come from their commissions, just to make that completely clear. Where that comes from is a thank you from IAMS. So Steve and Charles, the CEO and owner of our company, as we are independently owned, signed that paycheck. And those are their favorite paychecks to sign because it is a compliment when you do get a referral. And so we pay those out on a quarterly basis off of indexed annuities. You can get up to 20 basis points. MIGAs, 10 basis points, single premium life, 75 basis points, and then off of life target, 15 basis points. So a lot of agents get that on a quarterly basis because they take full advantage of that. It's an extra way to continue building your practice and to put some money back in your pocket. The back office support we have, I think, is key to our success here as an IMO. We definitely work smarter, not harder. All of our departments are here in the building, and we've got 2 locations, one in Topeka, Kansas, and one here in Omaha, Nebraska. I am out of the Omaha, Nebraska location, and I can definitely tell you we all come into the office at 7:45, as early as 7:30 for some people, and we're all working toward getting cases issued, making improvements within the company. And, the thing about IMOs, we're not all perfect, definitely not, but we do work very hard to maintain our relationships with agents. And so we've got a lot of business building tools. We've got case design assistance. We've got forms available on our IAMS portal where everything is available in one place. And then just the case design, really. And so the biggest thing about case design and the marketers that we have here is that we have some really big key contacts that we can reach out to if we really absolutely need something. And so that is a really huge plus on our end when it comes to our back office support. We also have our IAMS website, which I mentioned a second ago. Everything is available on this website. So if you are working on case design, for example, on Annuity Rate Watch, we can go through different income riders. We can go through different premium bonuses. We could see what the highest caps are on the indexes. We can see what indexes are available with which products, all on this, all while also submitting an application and even being able to track what is currently in force because we have something called Luma Firelight. So Luma Firelight, everybody's familiar with Firelight, not so much Luma. It is a new advancement into the insurance industry. So not every carrier is subscribed to Luma, but the ones that are definitely play bigger in their space, I would say. So Luma gives you the ability to track in-force applications. It gives you the ability to track what's in pending. If you have any pending applications, it really gives you a whole lot. Eventually, they're also going to have product training on there because they've got learning on one of their tabs. And it's really, really big if you have been doing this for maybe 10, 30, 40 years. I have some of those older seasoned agents. For some carriers that are actually subscribed to Luma, you could actually import their in-force policy. So every policy that you've written, you can see what their caps are. You could run a full report. You could see if they're about to come out of surrender and see if there's any other opportunity in your book. And so something that I like to call that is backyard business, because sometimes, especially at the start of the year, the pipeline might be a little bit dry because maybe you worked really hard at the end of the year, got everything across the finish line, and now we're looking at marketing. Sometimes the best and easiest, quickest way we could find business is just by going back to some of our older clients, and Luma makes it really easy to do that. So definitely would suggest you look into that with one of our sales directors here. We also have our creative services. So our creative services do offer agency solutions, digital solutions, turnkey solutions. I've got my camera on, so you may or may not see a camera in the back. Right now, we're actually recording for our Ascend virtual kickoff. And so we pre-record a lot of the material, but it is a live event. And so we're in the process of pre-recording the material. And we do that for a lot of our agency owners too, and some of our independent agents. So we know that marketing can be a really crazy ballpark to get a grip on. It's costly. It takes a lot of time really to get some marketing off the ground. And so you're fully supported. We actually have our own in-house creative department that helps with brand management. They also help with digital solutions, turnkey options, and that's all in-house. So in the past, when I've had some urgent things that needed to get done, I can go barge right into their office and let them know, hey, I've got something I really need help with. Would you be able to help me with that? And I get included into their pipeline of things to do. So they're all really, really good. All very customer service oriented, and we do have our marketing analysis that we also do. This is customized to IAMS, so this is a two-piece process that we've put together. And what we do is a quick sweep of all of your social media, website, whatnot, see how the performance and analytics are on maybe some of your digital advertising. And then we also look into the current marketing that you're using, because we take an omni-channel approach. We know that maybe one way of marketing might not be enough to really fully scale in the way that you want to and deserve to. And so we take this, we give that over to our creative team, and then the creative team then puts together pretty much a 20-minute plan, 20-page plan for you to really just have some suggestions on how we can increase your scalability when it comes to the marketing. And then we also have our IAMS Wealth Management. So this department is actually in a different building, but we are so lucky to have them. I think these financial advisors are some of the best in the business. They're incredibly sharp. They're always current with the market and always letting us know what's going on in the market. And what they're proven to do is increase their revenue, improve client retention, and strengthen relationships all through the IAMS system that they have built. And so they're constantly bringing on new people, new advisors. They're hiring. They've been hiring people. So that just tells me that they've been growing as a department as well. And so if you are a securities registered rep already doing wealth management, I would highly consider you or highly suggest that you consider IAMS Wealth Management, and we can always connect you if you are not familiar quite yet. And then we do have our Life and Annuity Academy. Our Life and Annuity Academy is a live in-person training that we do. And so we did 5 last year, but we'll maybe do 3, 4, 5 a year. 5 was a lot, but we got the chance to meet with agents in person and really get them trained up and scaled up for this year. And in these academies, we've got our multi-million-dollar keynote speakers. We also have different sales concepts that we introduce. You'll also get the chance to meet with different vendors for marketing. It's the one time that you also get to meet these people in person, because it's nice to know who exactly you're doing business with and who you're giving business to, especially if you're buying any kind of marketing. And it also gives you a chance to meet our wealth management department and all of our sales directors. So highly encourage you to take full advantage of this if you have not yet been to a Life and Annuity Academy. And then, like I mentioned a second ago, I don't have a slide for this, but we've got our Ascend virtual kickoff we're doing on February 4th. Now that is not in person, it's a live virtual event, but it's free to attend. It's welcome to all life annuity agents. And we've got a lot of great things lined up. We've got some prizes and some giveaways, but it's 5 hours of knowledge and updates of what's going on in 2026. We also do have Robert Engel. He is a Nobel Prize winning economist and a big name in the finance industry who'll be sharing his knowledge as well. So I highly encourage you to register for that. If you are not able to attend, I know you guys have appointments. As long as you're registered, you get full access to the recording. So definitely register. And if you don't have the registration link, just call us and we'll send it right over to you. And that would conclude everything that I have for my housekeeping. These are Facebook and LinkedIn links that you can definitely tap into just to stay current with what we're doing here in the building and here at IAMS. And then we've got our number 800-255-5055. If you'd like to call in, you'll always get a live person every single time. And then our website, of course, IAMSinc.com. And before I get this over to Sam, I am going to shoot a quick poll here and The poll is, are you open to exploring new annuity solutions this year? So annuity solutions could mean new carriers like Talcott, for example, maybe new marketing options. You know, we're here full service as an IMO, and we want to see you have success. So thank you for taking the time to vote. I'm going to close that up now and pass that along to you, Sam. Thank you
All
so
right,
much.
perfect. Thanks, Kat. And let's see here. I'm not seeing the option to share. I think you may need to make, there we go. All right. I spoke too soon. My apologies.
No, I just was too slow, Sam. Sorry about that.
All right, let's see here. And just let me know if you can see that. All right.
That looks great to me, Sam.
All right, perfect. Well, we will jump into it. First, I just want to, again, thank everybody at IAMS and Kat for your partnership. And, we look forward to working with everybody here in 2026. And we are thrilled about our recent product launch. And, a big thank you to all of you who are joining and taking time away from your business to be here today. So my name is Sam Wiss. I haven't had an opportunity to meet many of you yet, I'm sure, but I'm happy to serve as the relationship manager for IAMS with Talcott Financial Group. And just thrilled to be here and excited to show you what we have to offer. So I'm gonna go ahead and jump right into things. Happy to take any questions that you have at the end that you can send over to Kat. So want to spend time talking about just a couple things. First, if you're not familiar, who is Talcott, right? We'll give a brief overview, brief history of our company, our roots, and who we are, along with some of the key members of our leadership team. And we'll also look at our Everstead MYGA product. And after that, we'll look at our extremely competitive growth product, which is really the main feature of our webinar today, our Aspire product. And lastly, I do want to just draw some attention to the operational systems that we'll be running on. We know how important service is when giving a new company a shot, and we want to do everything we can to get off on the right foot. So we'll touch on ops and then suitability, types of business that we'll accept. And lastly, we are running a producer incentive for the full year 2026. So we'll cover that at a high level as well. So first things first, Talcott. When we talk about Talcott might be a newer name to many of you, but we often say, hey, we're new, but we're not new. We're a new entrant, but we're not a startup. We recently entered back into the retail annuity market here with our product launch at the beginning of January with IAMS. But Talcott is actually built on 100 years of experience, as we have roots back to Hartford Life. And Hartford Life was started in 1902. Hartford Life is a name many of you may be familiar with, but Hartford Life in the early 2000s was actually the industry's #1 seller of variable annuities. Hartford Life ended up getting out of the business. They shed their life and annuity block. And in 2018, Talcott purchased that. And that's helped us get to where we are currently with 126 billion in assets under management. And in 2021, Talcott was acquired by Sixth Street. Sixth Street is a private equity firm who has an additional 120 billion plus in AUM themselves. And they're really our strategic partners, and they provide asset management expertise along with the capital to fuel our growth. So all in all, annuities are not something new to us as an organization. At Talcott, we have over 500 employees, many of which are located in our headquarters in Hartford, Connecticut. And we have 1.2 million contracts on our books currently. That's either from policies that we've issued in the past as Hartford Life, or that we currently reinsure from some of the industry's top names. And we are A- rated with AM Best. So as you can see, we're new, but we like to think we're veterans in the annuity space. For our leadership team, our CEO is Imran Siddiqui, and Imran has a rich history of growing life insurance and annuity companies throughout his career. Imran was actually part of the group and one of the driving forces at Apollo when Apollo founded Athene and grew it into the annuity giant that it is today. And Imran has a ton of confidence in his ability to build a great insurance company, and he's looking to replicate that success that he's had previously here at Talcott. Our head of retail and the leader of our sales team is Ryan Lex. Ryan Lex has been around the IMO and independent distribution for a very long time. Prior to Talcott, Ryan was formerly Chief Distribution Officer at Ibexus, and prior to that, he led the IMO channel at Athene. So, Ryan, he has a commitment to the independent space, and success seems to follow him wherever he goes. So we're thrilled to have both of these individuals leading the charge for us here at Talcott. So that's a bit of a background on our company and leadership team. And now I want to jump into product. The first product we'll discuss is our Everstead MYGA. And MYGAs, they're a great CD or money market alternative. The rates on MYGAs are often higher than what you might find in a bank CD. MYGAs also have liquidity provisions within them. And rather than having gains taxed every year, MYGAs allow growth to be tax deferred, all inside of an annuity wrapper. I'll cover our specs on the Everstead here. What we have is we have multiple term options from anywhere from 2 to 10 years, depending on your client needs. 3, 5, and 7 year are the most common durations in the marketplace. What we have are what you would call off the run durations, 2, 4, 6, 8, and 10. A little less competition there in areas where we can be competitive. Our Everstead MYGA pays interest on a compound basis. There are some simple interest options in the marketplace, but ours is compound. We also have 3 bands. A lot of bands when it comes to MYGAs are 100K and above. We actually have a high band that's 500K and above. So we have a low, mid, and high band. And free withdrawals, your clients, they're able to access 10% free withdrawals or RMDs, beginning in the first year at no cost to them. I know some products that are out there, there's a charge for liquidity or there's a rate reduction. Our MYGA does not do that. Everything is built in at no cost and no rate reduction. And again, the free withdrawals available on a systematic basis. And lastly, at no additional cost, the MYGA, it includes a full death benefit along with confinement and terminal illness waivers. Again, fairly straightforward. And we'll have a look at the rates next. The current rates are here on the screen, and as you can see, our high band 500,000 and above has the most competitive rates with those durations from 2 to 10 years. So again, MYGA is typically pretty simple, pretty straightforward. 2 to 10 year, 10% free withdrawal starting in year 1 without a rate reduction, along with 3 different rate bands, and again, paying compound interest. So that is our MYGA product. And next I want to switch gears and talk about our Aspire series. Our Aspire series is our product suite that's built for growth and accumulation, really built to maximize a client's cash account value. But before we get into all the product specs, I do just want to paint a bit of a backdrop with where we are in the current equity market environment. And then we'll go through the Aspire product, its features, and sort of how we differentiate from some of the other FIAs that you see in the marketplace. So, we're currently sitting at all-time highs in the equities market. The S&P, the Dow, the NASDAQ, they continue to break records, and the S&P 500 is approaching that 7,000 level. Performance-wise, the S&P also just had its second best summer since Eisenhower was president. It was up 21% over a 5-month period from May to September. So just, a great run. And, first, I just want to caveat, I'm not in the business of market predictions or macroeconomic predictions, but I do know that rebalancing risk and hedging risk can certainly make sense when we see markets get frothy and they've had a run like they've had recently. It's really not a question of will we have a large pullback, a large correction. Really it's a matter of when. And if we look back historically, we've seen 6 bear markets over the last 25 years, with 4 of the most notable ones here on the screen. So as you all know, the issue clients have is as they approach or get closer to retirement, if they take part in a sharp pullback like the ones here on the screen, they don't always have time to get back to even, right? They don't have time on their side. A 50% loss requires a 100% return to get back to even. And sometimes things work out and we see those V-shaped recoveries, but I was reading a statistic the other day and it really caught my attention. After the dot-com crash, the NASDAQ needed 15 years to break even and fully recover prior to that correction. And I think it's just something like that that really has the potential to be devastating and could derail somebody's retirement goals. So, knowing all that, when we think, what have retirees, pre-retirees, what have they done traditionally to hedge risk? You might think of the 60-40 portfolio. Bonds have been an alternative, maybe parking money in cash. But, for all of us here on the call, we know the power of FIAs and how they can serve as that bond alternative and that safe money solution to really take risk off of the table. And, in today's environment, FIAs can manage risk extremely well while also providing some things that I think other safe asset classes don't have, right? FIAs, and again, we all know this, but you have full principal protection. There's no risk to principal if the interest rate environment moves. The price of an FIA doesn't fluctuate whether interest rates go up or interest rates go down. And when a client allocates 30, 40, 50% of their portfolio to an FIA, you have full protection on that and risk is taken off the table. And depending on somebody's risk tolerance, what it can allow is permission to have more equity exposure or full on equity exposure or more risk taking with the other portion of their assets, which oftentimes is what clients and policyholders they do in fact need. Kind of staying along those same lines, when somebody has two different buckets of money, their safe money and their risk on money, their stock portfolio, they can choose they can choose what asset class to take a withdrawal based on how each of those is performing. The equity market drops or corrects, say the worst thing you can do is take a withdrawal from that portion instead, take a withdrawal that year from the FIA and vice versa. But I think having an FIA as part of the portfolio, a client has options and it can help them preserve their nest egg for a longer period of time. So, with that, I think our Aspire product is really, uniquely positioned among the different growth and accumulation FIAs in the marketplace. And I'll talk through the product specs of the Aspire now. So what we'll have is we'll have a 5, 7, 10, and 10 year with a premium bonus. Again, this launched at the beginning of January. So these are all available. All versions issued to age 85. Product minimums are 25K, max of 2 million. We'll certainly look at cases above 2 million with approval, and rates are banded above and below 100,000. We will take qualified and non-qualified funds. And again, I know we talked about this, but we also take non-qualified stretches. I know as you come across that type of business, there's not too many homes as far as carriers go for those ownership structures. So, we will take non-qual stretches on any of our products. So something to keep in mind and take note of. We'll also accept inherited IRAs when they are spousal. So all good stuff on the ownership front. 10% free withdrawals beginning in year 2. And again, the contract is RMD friendly with a full death benefit. So just given sort of the large amount of replacement business that we've seen happen over the last few years, it's probably no surprise that we have a premium bonus option. The premium bonus is 15% with no fee. Premium bonuses typically, they either have a fee associated with them or there's a rate trade-off compared to the non-bonus version of the product. We went with the latter. There's no fee for the bonus, but lower rates compared to the Aspire 10. But at 15%, we have one of the higher no fee bonuses in the industry. Past age 75, the bonus is reduced slightly. It's 12%, but a 12% bonus up to age 85 is a bit of a sweet spot as well. You don't always see a bonus that high at those later ages, so something to keep in mind. For upside potential on top of any premium bonus that's elected, we have 5 different interest crediting strategies. We have an S&P option, an annual point-to-point with a cap rate. We have a fixed option and 3 custom indices that are exclusive and only available on our suite of FIA products. And we were very purposeful with these 3 custom indices, and we think they complement each other pretty well. First, the S&P Angle Index. This index, it's an S&P sort of replacement or complement that leverages the research of Nobel laureate Robert Engel. I know Kat mentioned it earlier. He will be speaking at the IAMS Ascend virtual kickoff in a couple of weeks, so be sure to check that out. This index, it's equity only. It has a 15% volatility target, which is a high vol target, something we know many of you appreciate in our current rate environment. And rather than a participation rate, this index actually will have a cap rate, and the cap rate will exceed what's available on the standard S&P strategy. So again, a great S&P alternative and a way to shoot for more upside. We also have the Invesco B of A QQQ Balanced FC Index. This is our balanced solution. And balanced meaning it has equities, it has bonds, it has treasuries, and cash components. And it applies Bank of America's patented fast convergence technology to the Invesco QQQ ETF, one of the most popular ETFs in the world that follows the NASDAQ 100. And rounding out our index lineup is our Goldman Sachs Enhanced Multi-Asset Index that really aims to be sort of an all-weather strategy. There's an equities component, the S&P 500. There's a bond component, which is treasuries, and it has the ability to go both long and short treasuries, and also a gold component, a hot topic right now in the news, and alternatives as well. So 5 options, again, something for everybody. And when diversifying, the hope is each index performs well, maybe even in different market conditions, ultimately equaling hopefully more positive outcomes for your clients more often than not. And on the topic of diversification, we have model portfolios available as well on the Aspire product. And I think before we go into what the models consist of, I think it's important to just kind of highlight what they do, right? They can really simplify things at the point of sale. If you want to spread allocations around to the different indices, it's simply clicking a button inside of the application process. They automatically diversify the allocation selections, and on future contract anniversaries, they automatically rebalance to the original weights, the weights that you see here on the screen. And each of the models has a benefit. The first model on the left-hand side of your screen, it's called the Balance Rate Guarantee, or BRG model. Inside this model portfolio, the 3 custom indices that are available have their rates guaranteed to term. We understand as a new entrant, you don't know what our renewal rates are going to look like. And well, I can tell you that our philosophy is we're pricing our products to hold rates consistent throughout the entire term. We also wanted to show that with built-in guarantees inside of this portfolio. Next is the equity-focused model. This model includes the 3 custom indices along with the S&P 500, and it gives you all as producers and your clients access to a higher S&P 500 cap rate. We know just looking at the industry statistics, the S&P has been a favored index allocation in recent years, and this allows a portion of funds exposure to a higher S&P 500 cap rate rather than just standalone allocations. And again, we think there's value in these models. However, nothing is forced, and selecting models are completely optional. So when it comes to sitting down and making allocations, again, that is up to you and what you and your clients want to do. Nothing is forced. Next, I want to touch on the current rates. So the rates you see here on the screen, these are for just manual allocations. As I mentioned, the rates are banded above and below $100,000. And I think, there's a lot of numbers on the screen. So to sort of analyze our offered rates and what we have, let's simplify things and just focus on the 10-year high band rates. So the current S&P 500 cap rate is 9.75. The S&P Engel, using Robert Engel's research, is 11.50. The Invesco B of A index has a 75% participation rate, and the Goldman Sachs multi-asset index has a participation rate of 100%. So keep these in mind as we move on to the next slide showing our BRG, or balance rate guarantee portfolio. So the rates you see here, these are actually guaranteed for the entire surrender charge period. The S&P Engel cap has a cap rate of 10.50, so only 1% lower compared to manual allocations. The B of A QQQ index is only 5% lower, and the Goldman Sachs index is only 5% lower as well. So, what does that mean? By leveraging this model portfolio, you take a very minimal rate decrease compared to manual allocations, but the rates are guaranteed for the entire 5, 7, or 10-year period. So really good stuff there. And then next, our equity focused model portfolio. Again, if we focus on the 10-year high band rates, rather than getting an S&P 500 cap rate of 975, your clients would actually receive a 12% cap rate, and the three engineered indices, they have the exact same rates as manual allocations. So there's no rate reduction compared to manual allocations. Again, another great value prop here, allowing your clients access to a higher S&P 500 cap rate. Again, when funds are spread out among the four different indices. So here are some additional details on the Aspire product. I won't go through all of these, fairly standard provisions, just as far as growth FIAs go. But nursing home and terminal illness waivers are built into the contract. And then you also see the withdrawal charge schedule and the premium bonus recapture schedules as well. So again, great stuff with our Aspire product. And just to summarize it, we're at equity market highs right now. It can certainly make sense for some clients to hedge risk, and they can do that using an FIA like our Aspire product. And our Aspire product is highlighted by a 15% no fee premium bonus. It has 3 engineered indices, custom indices exclusive to Talcott, in 2 model portfolios, one model with guaranteed rates to term and the other model with a higher S&P 500 cap rate. So again, great stuff with our Aspire product. We are really excited about that. And, I know we're going through a lot. We talked about Talcott as a company. We talked through 2 of our products, and now I want to touch on operations and suitability and how we've strived to really make doing business with us as easy as possible. So, what we've done prior to launch here at the beginning of January is spent the last 18 months really building and refining the systems that are standard in the industry and plugging them together. So, things can go smoothly. And we think we've come up with a really great offering with our current tech stack. And from a licensing and contracting perspective, we use SuranceBay and SureLC. The product training is built directly into SuranceBay and SureLC. So as you go to get contracted with Talcott, you will take the product training as part of that. You don't have to go to our separate website and do anything like that. We do e-apps only. So we do Firelight for e-applications, and our illustration software is also part of Foresight, which is it's similar to Firelight, and everything from an application, if you run it, is portable into if you run an illustration, it's portable into the application. We've tried to automate suitability as well as part of the Firelight process to make things really easy. We issue daily, commissions are paid daily with batch processing. We have both agent and producer and client portals, and everything is self-serviceable right inside of those portals. And one statistic that I think is really neat and great to know is, we try to make everything electronic and make things automated, but there are going to be hangups, and things are going to happen with certain policies. And our operations team has an average tenure of 13 years. So just a great a great tenured operations team, there to step in, willing to step in, if something does get sideways. So ultimately, just, we want to be easy to do business with. We want to get policies issued faster. We want to reduce NIGOs, and we want everything to be done electronically and seamlessly for you all doing business with us. Our suitability, like I mentioned, it has been automated as much as humanly possible within our e-application through Firelight. If something doesn't fit our guidelines, it'll appear red, and it'll let you know where things fail. But I do want to just spend a sec and talk about the type of business that we will accept. We get a lot of questions on this. So just from a replacement perspective, again, there's a lot of replacements happening. Our stance is, if it's in the client's best interest and you're looking to move a contract from one carrier to Talcott, that contract has to be at least 2 years old on replacements. Annuity to net worth ratio, that depends on a client age, but we will actually go up to 85% of a client's net worth in annuities when they have a higher net worth. That's like a $2 million net worth or more in assets, and they have enough liquid expenses, again, based on our guidelines. But we're flexible there. The max surrender loss is a net 7% outside of California and Minnesota. Those are no loss states, but max surrender loss is a net 7 for income rider to income rider replacements. I know our income oriented product isn't the topic of this conversation, but we do have an income product. Guaranteed income is somewhere we're really competitive. Income rider to income rider replacements, if we beat that other carrier's guaranteed income, we will take that up to a 7% net loss on the accumulated value. Even if it goes above 7 slightly, we will still look at those cases if it makes sense and if we beat the other carrier's income by a sufficient amount. So again, just wanted to cover at a very high level some of the big suitability guidelines that we're getting questions on here over the first month. And finally, we understand nearly all carriers are offering the ability to earn above and beyond street compensation. As a reminder, our street compensation is 7% for 10-year FIA business, but this producer incentive that you see here on the screen, this is live now and runs through the end of December 2026. The first tier begins at $2 million in issued premium, and it does max out at $10 million, where you all as producers can earn an additional $150 on 10-year FIA business, and all bonuses are paid retro to $1. So again, we're excited about this as well. And with that, I want to thank you all again for taking the time out of your day to join us. Thank you to Kat and IAMS for having us on. And I don't know if any questions have come through in the chat, but I'm happy to take any questions at this time.
Yeah, I don't see any questions or anything in the chat box. I know we've had a lot of questions come in on the Everguard income product, but on the Aspire series, something that we actually pointed out on our morning meeting that we do internally is the fact that you guys have a premium bonus of 15% all the way up to age 75 without any sort of fee. So that's the highest premium bonus that goes up to that age. And then after that, all the way up to age 85, right, Sam? You guys issue till max issue age
That's
is
correct. Yep.
85. They still have a 12% premium bonus without any fee. For older people, that is amazing. So if you have some underperforming annuities, we know that there's a premium bonus, but also that is a guaranteed of 12 or 15% paid out by Talcott to put them in a better performing annuity. If they're in an underperforming one with a net loss again of 7%, so there's really a lot of good opportunity. And then I'm really grateful that you shared that MIGA too, because I have some agents, especially with today's volatile market, looking at MIGAs to maybe do like a laddering strategy. Maybe place those, maybe a good portion of the money into a MIGA, another portion into a fixed indexed annuity, and then another portion in the market for those that may have higher net worth. So there's really a lot that you guys do. And something else I caught that you guys did just while you were talking was that you also accept non-natural ownership on your non-call stretches. Is that right, Sam?
Yep. That's right.
Yeah,
Yep.
yeah, that's really, really awesome. So that, and then two, the other thing, the fact that your product training is built into SuranceBay, I think is really strong too.
Check the
Makes
box
it really
really
easy.
quickly. Yeah, it just, it can be a headache to, you know, go to a separate website, get a new login. It's like, oh, we try to make it as easy as possible, while you're going through the process. Hey, just do
Oh
the
yeah.
training here now.
Yeah, just click a box and you're good to go. That's awesome. And then for processing time on contracting, how quick are you guys usually on that?
Um, we have people standing by at the ready, so I don't have a firm ETA, but it is very quick. And we actually pre-appoint in all states, I think, outside of PA. So you know, even if somebody has a client in mind for this, and they want to do business with us, they can actually submit business as well while background checks are pending. So another kind of
Really?
nice feature that
Yeah.
you know you can do business with us pretty quickly.
It sounds like it. So you guys are also pre-appointment then.
That's right.
Wow. Okay.
We actually
That's
pay for that. Yeah, I think it's kind of expensive, but yeah,
it sure
we
is.
pre-appoint in all. Yep, in all
Yeah,
states.
that's
I think, like I
awesome.
said, outside of PA.
Okay.
Yep.
Yeah, you learn something new every day. I don't think any of us realized that you guys were also pre-appointment because you guys are really, really quick to work with too. So I don't know if anybody even noticed. And thank you for that thumbs up, Tom. Sounds like you'll be wanting some Talcott contracting. I'm going to launch this poll right here. Are you appointed with Talcott Financial? So I know that you guys have been making headway, Sam, but certainly would love to bring some more people your way. We really appreciate you sharing the Talcott story. And you guys also have a webinar coming up too, don't you? With the leadership?
We do, yeah. We have a webinar. It's Tuesday next week, and we'll actually have Imran Siddiqui on. So he'll talk about Talcott's vision and our unique competitive advantages. And it's just always great when you can hear the story and hear the vision directly from the CEO. So he'll be on. It'll be great. And we'll have Ryan Lex on. I know I talked about Emron and Ryan as part of this. So they'll both be on, and then I'll actually be on as well, and we'll do a high level on the products again. So
That's
yeah,
awesome.
we're looking forward to it, and I think yeah, Kat, you guys at IAMS, you've got copies of the invite and the registration link. So yeah, if anybody wants to join that as well, it's open to everybody. There's no requirements. You just have to sign up. So we'd love to have you.
Awesome. Awesome. Yeah, I've been inviting for that event, so hopefully we could bring some more people over. But again, Sam, thank you again so much for the time that you've taken out to spend with us.
Oh, no, thank you. And you guys have been great partners at IAMS, and we just can't thank you enough for all the support. And we look forward to having a great 2026 with you.
Oh, we sure will.
All right. You
All
take
right, take
care.
care.
Thanks, everyone.
Bye-bye.
Bye.